What's happening, YouTube? My name is Mike. This channel right here is Health and Wealth. Thank you so much for joining me today, friends, on another episode of the channel. To the 3,400 of you that are subscribed, we're just about at 3,500. So if you enjoy this content today, consider tapping the subscribe button and the like button to let more people like you and me watch videos like this. Today's video, I'm going to be talking about Coney and Coney only. We're going to discuss, historical data on Coney. We're going to see, how much money you would have made if you're invested from day one, also over the last year. And we'll just see if that was a good decision or not. Right. So join me in that. Next video is coming up. We're going to do the same thing for Misty, for Nvidia. These are the three that I'm invested in. And if you've watched previous videos, you'll understand I do have a unique approach to Coney, in the sense that I'm navigating Coney differently than I am with Misty and Nvidia. With Misty and Nvidia, I'm taking the dividends, the distributions, and I'm doing whatever I want with them. If I want to buy more, I'll buy more. If I want to pay down debt with it, I do that. That's what I've been doing over the last month and a half, 2 months here. But with Coney, I have set it and I've forgotten about it. So now for the past 2 months, coming up here on month three, I invested. It was $2,900. It bought me 183 shares, something like that, and I set it on drip. And so to do that at Questrade, I had to physically fill out a form and send it off to Questrade, and they went ahead and did the drip with Coney. And so just to clarify with that, it's a one-time form that I filled out, and I actually have to tell them not to drip. So I've told them that I want to drip Coney, and so the plan is I'm going to drip Coney for the next 5 years, for a 5-year total, and we're going to see where it ends up. Now, my original purchase price was around $16, and since then the price has plummeted down. So today's video, we're going to investigate why that happened, but also we're going to investigate historical data, like I mentioned. So let me know in the comments, are you invested in Coney? What do you like about it? What don't you like about it? And let's discover that together. So Coinbase today trading at 255 here. In the last 5 days, it's down 11%. In the last month, it's down 13%. Now, why is that? Well, a number of factors. Bitcoin uncertainty. Bitcoin is crypto's biggest holder. That could be one reason. Another one was the SEC had a case against Coinbase, and it appears like Coinbase says SEC has agreed to dismiss that case. Now, that created a pop in the share price this morning, which is one pre-market, right? It's not a large sample size here, but since that happened, that pop up, the share has come down. It was up 2.5% this morning, but come around lunchtime now, it's just down a little bit. So this is an up and down market right now. And Coinbase, to me, I think it's a solid purchase. Coinbase, the experts are saying they have a price target at $310 for this share, or for the share price here. So I mean, it can go upwards, obviously. Now, obviously, things can happen. It could go down. The volatility of the market does definitely help with that, especially with Bitcoin volatility, Ethereum, all of the different altcoins that Coinbase handles, things like that. So for me, I'm invested in Coney. I don't have a ton of shares compared to some of you that are watching this video, but I do have a plan, and the plan is to set it and forget it. Now, I also have Misty and Nvidia. I also have Nvidia, a few other shares out there, but with Coney, it's a different story. What I've done is I've gone ahead and set it up for drip. And so the plan for that is to drip it for the next 5 years. And what that means, if you don't know, is that every single distribution date, whenever I get a payment, I actually don't get that payment. It just automatically repurchases the shares of Coney. So Coney itself, since I bought it, is down quite a bit. I bought it, 5, 6 months ago, but I've been contributing more and more. And 2 months ago, I bought my largest allotment of it, which was, not very much, like I said, but I think I was at around 189 shares. Since then, it's dripped two times, so 2 months, and I'm above the 200. I think I'm around 214 shares of Coney. And when I did originally purchase this, my average share price is $16.40. And so since then, you can see the price has definitely come down, right? And that's not good as an investor. You don't want to see your initial capital go down $5 in price in just a few months. So I mean, let's take a look here. There it is, right? 6 months down $4.98. So that's not a good sign at all. But what are we getting in place of that price going down? We're getting ourselves some distributions, right? And so what I've done is I've taken a chart here. This is at dividendchannel.com website. Pretty easy to use. I've gone ahead and entered my symbol in here, CONY at the top. And then over here, we got some information about it. It's updated pretty thoroughly, actually, right? So it tells us the current price, $11.88. Previous close, 11.59. The 1.14 market cap. I think it's just slightly under that today. And its last distribution was $1.04, which was on February the 7th, right? So in another couple of weeks from now, we'll be getting another distribution from Coney, which is awesome. But I mean, $1.04, that's excessive. Here's all of the last distributions all the way to the beginning of it. And it's paid out a ton of money in that time. So what I'm going to do is I'm going to do a 1 year check. We're going to see if I had invested in Coney a year ago, where would I be today? Also, if I invested that same $10,000 into the SPY, the S&P 500, where would I be today? We're going to do two comparisons with that one, drip and non-drip, right? Just to kind of take a look at the difference. And then after, what I'm going to do is I'm going to compare Coney to Coinbase, because a lot of people say you're better off just investing in the underlying. And so, yeah, in some of these senses, I agree. For example, I've taken some of my distribution type money and I've invested in Nvidia, the underlying for Nvidia, because really strongly believe in Nvidia for a long term purchase. Now, we'll do all of that here. If you haven't hit the like button yet, please hit the like button so more people like you and me get to see this video. And let's go take a look at the comparisons. All right, so I've got the chart up here. I've inputted the dates, and this is just for the last year. So you can see February 1st on Coney at the very top up here. I'll highlight it with my mouse here, and then you got the SPY next to it, right? So the end date is today, actually yesterday. Starting share price a year ago on Coney, oh my goodness, $20.56. But look at the share price now, $11.59. So that's not good. You know me, if you've been watching my videos, I like a stable share price plus getting a distribution. So that's not good, obviously. Now you can see SPY, it's giving you that upside, right? So it started at $489 a year ago, and now it's at $610 as of the last reporting there. So massive climb with the SPY, and that's what you're going to get traditionally with the S&P 500 is good share appreciation. So your starting shares, if you started with $10,000, was 486, or 20 shares over on S&P 500. And if you had have done DRIP, dividend reinvestment program, or purchase, you would have ended up with 1,401 shares. Holy smokes! Your dividend reinvested was $19.49 in that period of time, compared to $7.07 here. Your total return was 62%, compared to 26%, and your average annual total return is 58.40. Now that's including the share price that has diminished quite a bit in that time, right? Almost $9 it went down in that same period of time on Coney, right? So imagine if the share price was more stable, you probably would have had a lesser distribution during that period of time. But that's pretty incredible, right? So your starting investment was $10,000, and then you ended up with $16,244, right? So that's a really great investment. That's roughly 60% return in just 1 year. Well, there it is, 58% right there, compared to the S&P 500, which is steady. You know, it's more reliable. It has a longer history of reliability to it, right? So if you are the type of investor that doesn't really want to risk it, then the S&P 500 is, everybody says, Warren Buffett says S&P 500, leave it there for 20 years, you're good to go. But for people like myself, I am willing to risk it because it's not a huge chunk of money for me, and it's okay if I lose it. But that's a really interesting history right there of the last year. We take a look down below here. This is without the drip, so no dripping. You're collecting the distributions. Yeah, let's take a look here. So start date February 1st, starting price, ending price, all the same. Dividends collected $19.49. Same total return 51%. So a little bit less. Average total annual total is 47%. Again, a little bit less because you haven't reinvested the money back in to repurchase shares to buy more shares the next month. That's all. That's the big difference here. So instead of 58%, you've taken in 47%, which again, that is incredible, right? It's half of the money you invested, you took back. You got to maybe go pay your bills with that. You got to go buy a new car with that. You got to go out and retire with that money, whatever, right? Bought some whoozy whatsies and whatever you wanted to do with it, right? So, still a good move by you, right? That was pretty incredible, that's for sure. Now, will this translate to next year? Nobody knows what the future is, and so you can't predict that. So what I'll do is I'll compare CONY to the S&P 500, but from day one, right? So I'm going to say October 1st here, all the way to now, February 21st. So we're talking like a year and a half here, and again, $10,000 invested. The first one that we did was 1 year. Now we're going to do a little bit longer, right? So take a look at the differences here. So same date, same prices as what we did before. So a little bit different, right? 1968 starting price, current price 1159. Your starting shares were 508 shares. Your ending shares, which is astronomical, you 4 times your shares here, 2016 shares now. Your dividends that you received was $26.93. So it's $7 more, $7.30 more than your initial investment. So your total return in that year and some odd months was 133%. Your average annual return is 84%. And your ending investment, if you just said, I'm out and took all your money out, at this point, you'd have $23,366 in there, minus your taxes, of course. Compared to the S&P 500, if you did the exact same thing in the exact same time, you would have a 30% return, which is definitely good. It's 100% good. I'm just comparing the difference between the two. And then down below here, if we didn't use drip, right? The top one up here, over here, top one is dripping. The bottom one is not dripping. So you just took your cash the whole time. You got a 62% return in that time. Your ending investment was $19,571, which is really good too. So what do you guys do? Do you drip? Do you take it out? Do you manually reinvest? What a lot of people are doing is they manually reinvest on the X distribution date. So an example, 2 weeks from now on Wednesday, they'll have the announcement, hey, CONY's going to pay out whatever, 85 cents as an example. And then on Thursday is the X distribution date. And that price will drop to 85 cents, give or take, depending on the market. And what a lot of people do is they reinvest what they're about to get, that 85 cents times their 100 shares, as an example, on the X distribution date because they know the price is going to be lower, in hopes that they're going to be able to buy it on sale. And then over the next 4 weeks, that price goes back up. That's why people do that, right? That's the hopes and the dreams, of course. So let's go take a look at this compared to Coinbase now. Okay, so what we're going to do, we're going to say other. We're going to call it coin. And we're going to say from day one. From day one, here we go. Comparison. Hey guys, new word. Hashtag keyword comparison. So we got October of CONY and Coinbase. Wow, look at the share price of Coinbase. So it may have made more sense to invest in Coinbase at this time. So look at the difference, right? So you would have had your starting price 1968 compared to 75. Your current price 1159 compared to 256. Your starting shares 508 to 132. And now your ending shares quite a bit more. But take a look at that, right? Your shares aren't going up because there's no dividends with Coinbase, but there is with CONY. And so look at the total return, 133% compared to 240, right? So this is a classic. You could have invested in the underlying and you would be up more right now if you had a cashed out at the end of that, year and 4 months. Your money, instead of it being 23,366, you would add $34,071, right? So quite a bit different. And if you take a look at Nvidia, same thing. If you take a look at Misty and MicroStrategy, same thing. So a lot of people, what you're in this for is to get your monthly cash, right? Your distributions. And that's what this bottom example is kind of showing us here without drip. All the same stuff as above here. And the only difference here is your return. You're getting a little bit less return, but I mean, with Coinbase, you're getting the exact same return, right? Because they don't pay a distribution. So ending investments, 19,000. So yeah, I mean, you're up almost 100% in that ending investment, which is really good. But again, being in Coinbase would have been a better move for you in terms of your total dollar amount that you're getting back. So, what's really great about Coney so far is that it's paid out more than the initial investment that people put in. So, their initial investment was $19.68. Since then, it's paid out $26.93. So, you're playing with money that you've earned. You've earned 100% of your money back already, plus more, obviously 133% back if you dripped. So you got to be really, really happy with that purchase. So for me, again, the plan is to go ahead and set it and forget it. I'm going to find out what this is going to work out to in 5 years. Projections are pretty juicy, but again, historical data and past data doesn't mean it's going to happen again in the future. The SEC could come down with many lawsuits hampering the price of Coinbase, and that could really hurt our synthetic options that we have over at YieldMax. So I'm excited for the future, but I'm skeptical about the future. I think it's going to do great, but I have my hesitations with it as well. So that's my stance on it. I'm not a financial advisor by any means. I'm just some guy on YouTube talking about my current investments, and I really enjoy talking to you guys about it. If you enjoy my content, consider hitting the memberships option down below to help support my channel. But if you enjoyed this video today, you're probably going to love this video on Coney right here. I'm going to end it right there. My name is Mike. This is Health and Wealth. Thanks for tuning in today. Have a great day.